Hello guys, welcome back. So in this video I want to explain one of the members this week. He entered a bad position, he entered a bad trade going against the rules. However, when he realized it was a bad trade, he exited the position, and as soon as he exited the position, the price went his direction, and if he would have kept the position open, he would have made a lot of money in this specific trade. Now, the point of this video is to tell you guys that it doesn't matter your past experiences. You cannot let your past experiences condition your future trades or positions. So this means it doesn't matter if you know you're entering a bad trade, a bad position, and you exit, and then it turns out you would have made money if you would have kept it open. That doesn't mean that next time you should keep the position open, because that's gambling. You know what I mean? But what happens is our brain as humans, this is our condition as humans, we let past experiences condition future experiences. So next time you entered a bad trade, your brain is going to play tricky games with you, and it's going to try to convince you to this time keep the position open, because it's going to tell you, hey, look at what happened last time. If you would have kept the position open, you would have made a lot of money. So take your chances this time. Just leave it open and let's see what happens. Maybe this time you can make that money that you didn't last time. And then this time when you keep the position open, the price is going to go in the opposite direction of what you needed, and then you're going to lose money. Why? Because you're playing against the rules, and so by probability you were going to lose the trade anyways. It doesn't matter what happened last time. So I'm going to expand in this position so you guys can understand it better. So I have been calling for this short position since we were up here. This person didn't get the entry in time for whatever reason. Maybe he was sleeping and he saw the position next day when he wakes up, and he decides to open the position anyways, even though it's not a good entry. So he opens the position at 10,500, more or less. I could be wrong, but for the point that I want to make in this video, it doesn't really matter. I think he opened the position at 10,500. Members, if you're watching this, you can correct me on the comment section. But more or less, he enters the short position at 10,500, and he opens this position with 25x leverage. As soon as he opens the position, the price starts to go down, accelerating. So he's like very happy, he's making a lot of profit. But then obviously you're not going to see all red candles all the way through. You're going to have bounces on the way. So the price started to bounce here, started to go up. It came back down for a second, but then it continued to go up. So it went as high as 10,500, which is the exact entry, the entry level of this member. So he commented on the group. He said, hey, I know I entered wrong. I know I entered late, but this is my situation. I entered at 10,500, the short, and I entered with 25x leverage. So if the price goes to 10,700, I'm going to be liquidated completely. But we are still bearish, right? I should keep the position open, right? He was looking for reassurance. I said, look, the price can go as high as 10,900, which is the previous high here, and we would still be in a bear position. The short position would still be perfectly valid. But if you're going to get liquidated at 10,700, you're going to lose all your money, when you could have just not use leverage and you would have still been in the position. So if it was me, I would close this position immediately, because right now you're going to be for a break even or even make a little bit of profit. I would close this position immediately, and if you want, you can open a new short position, but with no leverage or maximum 2x leverage, because your stop loss it still has to be at 10,900. So you can do the math with the leverage that you're going to use. How much are you going to lose if the stop loss is run at 10,900? You don't want to be liquidated. and especially lower than the stop loss. That's risky, that's gambling. You should not do that, never again. So he said, okay, I'm going to do that. I'm going to close my position, and you know what? I'm not going to enter any other short position because the price is going up. So who knows? I think it is reversing now and going up. So I'm just going to close my position. He made total 10% profit, counting with the 20 times the 25x leverage. He made a total of 10% profit, which is very, very low for that amount of leverage. So, but he didn't lose anything in this position, but he didn't want to open a new short position when it was very clear we were in a bear trend here. So anyways, as soon as he closed this position here, the price started to tank. So if he would have left the position open, he would be sitting in massive profits now with the 25x leverage. So what happens now? Now, next time he makes the same mistake, next time he enters with 25x leverage and the prices start to go the opposite direction, he's gonna say, hey, last time I was in this situation, I closed the position, and as soon as I closed it, the price went my direction, and I would have made a lot of money. Why not leave it open this time? Just take my chances, and maybe this time I can make the money I didn't make last time. And then this time, when you decide to keep it open because you are conditioned from your past experience, this time the price is going to run your stop loss, or you're going to get liquidated completely because it's going to go up more than the last time when you close your position. Now, I don't think this specific member will make this mistake like the next time, because he's getting coaching obviously on the group. So he is able to bring this mistake to a conscious level, and then next time he catches himself doing this, he's gonna think twice before opening a position with 25x leverage, getting liquidated before the stop loss. So he's gonna think twice before actually open a position like this. I'm sure he's not gonna make this mistake again, or at least not as many times as other people would make, other people that's not getting coaching. But the point of this that I want to make, most people are not in private groups or are not getting coaching, trading coaching. So I cannot tell you how many times I made this mistake myself. And not only in the very beginning when I was learning to trade, no, I made this mistake many times for a very long time after I started trading. I let my past trading experiences condition my next experiences. For example, if I would have entered a position like in here, which is not the case, it's not, this is not a real position that I entered, but let's just use this as an example. What I would do in the past, I would enter when it's bouncing on moving average, I enter here, and then I use my Fibonacci extension and my support and resistance lines, and I get my exit here. I get my profit target here. So I enter here and I calculate this will be my profit target. And as soon as I take profits, the price continued to go up. So what would I do next time? I would have set my profit target way above, because I thought, last time I took my profits too early. So let me this time set my profit target way above, like 3 or 4 Fibonacci levels above, because I will make more money this time. And what happened that time then is that the price went up and up and up and up, but never reached my target. I went to sleep, and next day in the morning, the price was all the way down because it never reached my profit target. And all because I let my past experiences condition my future trades. Instead, you need to stick to the rules, and you need to stick to the method. If you are using a method to get your entries and your exits, you let the method decide for you where your stop loss is and your profit target is, so that you don't have to use your human brain, based on human emotions, fear, greed, past experiences. No, you don't let your human brain decide this. You let the methodology decide where your stops and profits are. And you stick to the rule no matter how many times you got it wrong in the past. Or it doesn't matter how many times you missed out in the past or anything. You need to continue to stick to the rules no matter what. I hope this concept is clear, guys. I think I'm going to leave it here. Thanks for watching, and I will see you soon. Bye.